Hey, what's up? This is Greg. Well, the inflation numbers hit the tape today, so I wanted to give you a quick update and also an analysis of both the numbers and also how I think it's going to affect the market. So here we go. All right, so basically what happened is the numbers were generally in line with what people were thinking. The overall CPI number, or as we call the headline number, came in at 4% increase. That's down, so this is showing a continued trend downward, which people generally view as good. But I want to point out that this is due primarily, meaning the reduction is due primarily to a reduction in energy costs. Okay, energy was down 11.7% on an annual basis. Okay, so this is not necessarily such a great number because it's largely due to energy, okay? What you're seeing in food is still very high, over 6%, and some other categories like shelter is again over 6%, and in the case of rent, it's over 10% increase, okay? So the various components of what go into this headline number are still very high, and they're just being offset by energy, okay? So keep that in mind. Now, when you look at the core CPI, which to me, and also as the Fed looks at it, that's what they focus on more. I think this is more important. The core number is still 5.3% increase annually, okay? So it shows that inflation is still very prevalent in the economy, and you should not take from this that inflation is moderating and the Fed's going to, start cutting rates, okay? So I won't go through all the components, but I think that basically summarizes it. I think the main takeaway from this is, yes, CPI is down, but it's largely due to energy, and core is still persistently high, 5.3 versus the target of 2%, okay? Now, what is this going to do to the market? I think what we can expect tomorrow from the Fed is probably, standing pat in terms of not raising rates. I think they're going to keep rates the same and just take a month off in terms of raising. I think the market is going to immediately go to the bullish mindset, which is, they're going to start lowering rates. And I think probably the market will rally, or this bullish sentiment that's been infiltrating the markets over the last month or so is going to continue. But I think that is going to be quickly dashed, because I think that in July the Fed will start raising again, because these underlying components of inflation in the economy are still high, and in some cases still going higher. And I've talked about this a lot on the channel. If you look at unemployment, the labor market is still extremely tight. Even though real incomes are going down, there's still an enormous amount of pressure on wages. And the services economy, such as travel and leisure, is still going up at double-digit numbers. So the components underlying these headline numbers are still very strong and still going up. Okay, now, again, I've shared this opinion many times. I think that one thing that the market is not focusing on, which, the various geniuses that I follow, like Stanley, Druckenmiller, I think that what the market is not discounting right now is a recession. And if you believe what Stanley Druckenmiller has expressed, what we're going to see is a fairly severe recession. We don't know if that's going to happen or not, but I don't think the market at this point is discounting a recession and also the impact on earnings that a recession is going to bring. Okay? So I think the windup here is inflation generally is still strong. Don't be fooled by the headline CPI number. And I think even if the Fed pauses, they're going to realize in July that they're going to have to start raising again. Okay, my belief is that the Fed funds rate is going to have to be in excess of 6% to make a meaningful impact on inflation, and therefore there's more pain ahead for the economy and for the consumer before we get through this current inflation cycle. All right, well, I hope you found this beneficial, and if you did, please like and subscribe, and I look forward to having you on board for future videos where we talk about the financial markets with the single goal of helping you be a better and hopefully richer investor. Thanks for watching, and I'll see you on the next video.